Wall Street wants you to believe that investing is like rocket science. They want you to think it requires 6 monitors, a caffeine addiction, and the ability to predict what the Federal Reserve is going to do next Tuesday. Why? Because if you think it is hard, you will pay them to do it for you. But here's the secret they do not want you to know. Investing is not like rocket science. It's actually more like watching paint dry or watching grass grow. If you're sweating, you are doing it wrong. Today, I'm going to show you the Lazy Genius portfolio. This is a strategy that takes about 15 minutes a year to manage, requires 0 brain power, and mathematically destroys 90% of the professional hedge fund managers in expensive suits. We are going to replace the grind with the glitch. And just to prove how lazy this is, I'm going to explain the entire strategy without using a single complicated finance word. No EBITDA, no Bollinger Bands, just straight cash. If you like making money while you sleep, hit that like button. Let's get lazy. First, we need to address a psychological problem. I call it main character syndrome. When most people start investing, they think they are the chosen one. They think they can pick the next Apple, the next Amazon, or the next crypto coin that is going to the moon. They download a trading app, they buy a stock because their cousin Chad told them to, and they watch the chart all day. Up 1%, they feel like a genius. Down 1%, they panic and sell. This is not investing. This is gambling with better lighting. Here's a brutal statistic for you. Over a 15-year period, 92% of professional fund managers failed to beat the market. Let that sink in. These are guys with Ivy League degrees, billion-dollar algorithms, and insider info, and they still lose to the average. If the professionals cannot pick the winning stocks, what makes you think you can? Stop trying to find the needle in the haystack. The Lazy Genius strategy is simple. Just buy the whole haystack. Think of the stock market like a casino. The active traders are the people pulling the slot machine levers. They win sometimes, they lose mostly, but eventually the house always wins. The lazy investor, we do not play the slots. We do not even walk on the floor. We own the casino. When you buy an index fund, which is the core of our strategy, you are not betting on one company to win. You are betting on the entire economy. If you buy the S&P 500, you are buying a slice of the 500 biggest, most profitable companies in America. You own a piece of Apple, Microsoft, Google, Amazon, and 496 others. If one company goes bankrupt, who cares? It gets kicked out of the club and replaced by a new, better company. You are betting on capitalism. And historically, betting on capitalism is the safest bet you can make. Okay, enough theory. How do we actually build this lazy portfolio? It is called the 3-fund portfolio. That is it. 3 funds. You do not need 20 stocks. You do not need gold bars buried in your backyard. You need 3 specific ingredients. Think of it like cooking a steak. You do not need 50 spices. You need meat, fire, and salt. If you add too much other stuff, you ruin it. Ingredient number 1, the engine, a total U.S. stock market index fund. This is your meat. This should be about 60 to 70% of your portfolio if you are young. Instead of just buying the S&P 500, we are going even wider. We are buying a total U.S. market fund. This gives you every public company in America, large ones, medium ones, small ones. Why? Because sometimes the small guys grow up to be the big guys. Amazon was a small company once. With this fund, you own the next Amazon before you even know what it is. Ingredient number 2, the insurance, a total international stock index fund. This is about 20 to 30% of your portfolio. Look, I love America, but the US is not the only place that makes money. What about Samsung, Toyota, Nestle? Sometimes the US market crashes while the rest of the world goes up. By owning the entire world, you are protected. If the dollar tanks, your international stocks act like a safety net. Ingredient number 3, the airbag, a total bond market fund. This is the remaining 10% or 0% if you are really young and crazy. Bonds are boring. They are loans you give to the government. They do not grow fast, but they do not crash hard. When the stock market dives 20%, bonds might go up 5%. They are the airbag in your car. You hope you never need them, but when you hit a wall, you'll be glad they're there. Now, before you run off and buy these 3 funds, there is one trap that can ruin this entire strategy: fees. In the finance world, fees are invisible vampires. You might see a mutual fund that charges a 1% expense ratio. You think 1%? That is nothing. I tip my barista 20%. Wrong. That 1% is not 1% of your profit. It is 1% of your entire life savings every single year, whether you make money or lose money. Over 30 years, a 1% fee can steal 30 to 40% of your total future wealth. We are talking about hundreds of thousands of dollars lost to some guy in a suit who creates zero value. The lazy genius only buys low-cost index funds or ETFs. We look for expense ratios under 0.1%. Vanguard, Fidelity, Schwab, they all offer these. If you are paying more than 0.1% in fees, you are essentially volunteering to be robbed. Stop it. So, you bought the 3 funds. You have your engine, your insurance, and your airbag. Now comes the hardest part of the strategy: doing absolutely nothing. This is where human psychology fails. The market is going to crash. It will happen. The news will scream, "End of the world." Your uncle will tell you to sell everything and buy gold, crypto, and bunker supplies. If you react, you lose. Fidelity actually did a study to see which of their investors got the best returns. Do you know who the winners were? Dead people. Literally, the accounts belonging to people who had died and therefore could not sell performed the best. The second best group? People who forgot they had an account. The lazy genius knows that volatility is the price of admission. The market goes up, the market goes down, but over the long term, the line goes up and to the right. Your job is to be an NPC. Just stand there. Do not press buttons. I promised you this takes 15 minutes a year. Here is the schedule. Step 1. Set up an auto deposit from your paycheck into your investment account. This happens while you sleep. 0 minutes. Step 2. Once a year, log in. Check your percentages. Let's say your US stocks grew huge and now make up 80% of your portfolio, and your international stocks shrank to 10%. You simply sell a little bit of the winner and buy a little bit of the loser to get back to your target. We call this rebalancing. It forces you to buy low and sell high without using your brain. That takes 15 minutes. Then log out. Forget your password if you have to. Go live your life. Listen, the goal of investing is not to look smart at dinner parties. It is not to brag about catching the next Tesla early. The goal is freedom. The lazy genius strategy is not sexy. It will not make you rich by next Tuesday, but it will make you rich. Guaranteed. It uses the entire force of the global economy to push your boulder up the hill. So fire your financial advisor, stop watching the ticker tape, buy the haystack, and go take a nap. Your future self will thank you. If you want to see more ways to hack the financial system, check out this video right here where I explain how to save your first 100K fast. Stay lazy, my friends.